The stock market is crashing. The stock market is crashing. The stock market is crashing. No, it's not, guys. Everybody calm down, relax. Do not panic sell your positions. Okay, on Friday, there was an absolute slaughter in the market. SoFi investors, especially, that's who I really want to talk about today. Is SoFi stock going to continue to crash like the market did on Friday? The stock is up well over 100% over the last year. So does that mean a correction is coming for SoFi stock? I want to talk about that in today's video. We're going to talk about SoFi stock, whether I think the stock will crash into that $8 range again like we were for the past couple of years. And I also want to talk about the broad markets. I want to talk about the NASDAQ, the S&P 500, and the Russell, and what happened on Friday and why I think it happened. All right, guys, my name is Jay. Make sure you hit that like button and subscribe to the channel. Let's get into the video. All right, stock market investors, welcome back to the channel. It was a rough day on Friday. My portfolio had the worst day it's had in a very, very long time, right? Especially because my two biggest positions are SoFi and Palantir. So we've had some pretty successful, I don't know, 6 to 8 months or whatever you want to call it. SoFi stock year to date up 3.82%. Over the last 6 months, over 100%. Incredible. Over the last month, we are down 17% from that $18 high, right? Now down considerably, trading in the $14 range. The last week, down around 5%. We got absolutely demolished yesterday, down nearly 6%. A lot of these big popular stocks like Palantir, down 4%. Down 14% over the last week. Still up 31% over the last month. 200% over the last 6 months, and year to date coming in at 34% and almost 330% over the year. I've been telling you guys to take profits on Palantir because when it goes up like a rocket, it crashes like a stone, right? So there was some bad news. Apparently, I'm going to try my best not to make this political at all whatsoever, but Donald Trump is cutting military spending in perpetuity. He wants to trim the budget, I think they said around 10% each and every year. So when you do that, companies like Palantir are going to get obliterated, right? So why did the stock market crash this past Friday? The big headlines are Dow falls nearly 750 points and U.S. stocks tumble as businesses, consumers are both worried about tariffs, right? Okay. So, a lot of federal workers are losing their jobs. This isn't a political statement. This is just what's happening. And inflation is sticking around. And I'm going to be honest, eggs have nothing to do with Trump's policies. The bird flu, supply and demand, that's what's causing the increase in egg prices. That has nothing to do with Donald Trump. Whether you like him or you don't like him, that's just the facts. But inflation across the broad spectrum, is still considerably higher than the Fed wants it. He's trying to bully Jerome Powell into lowering rates, and that is not going to work. Right. Because if he cuts rates, inflation is going to spike again, and then they're going to have to go back to increasing rates. That's just the way it works. When you decrease rates, it's typical that inflation goes up. And also, tariffs. Another political thing that I just want to get out there, guys. When there's tariffs, prices increase. That's just the way it goes. So with inflation already on the rise and these tariffs with China and, the threatening of tariffs with Canada and Mexico, a lot of our products, the majority of the products that we use in the States come from either China, Mexico, and Canada. The three of them make up a giant portion of the items imported into this country. And if you own a small business and you buy from any of these countries where there's tariffs, those countries like China, Mexico, and Canada do not pay the tariffs. The American company importing the goods pays the tariffs at customs, right? So whether it's 10, 15, 20%, whatever it is, and then that increases their cost. So therefore, these companies are going to have to raise prices, which increases inflation. Okay, so over the grand scheme of things, it's not great. It's not looking great, guys. So our stock's going to continue to slide. I would probably say the downside has more prevalence of continuing than a bigger upside where we're going to see new all-time highs. That's just my opinion, right? So the NASDAQ, brutal day, down 2.2%. Year to date, still up 1%. The past 6 months, up 10%. It's been great. Over the last year, up over 20%. Very, very successful last year for Joe Biden and the stock market. All right. S&P 500 down 1.71%. Year to date, still got a nice gain, 2.46%. And if you 2 months down, 10 more months to go, 12 divided by 6 equals the 2 months that we've done so far. So 2.5%. If you extrapolate that over a year, that's a very, very, very good gain for the stock market, right? Very, very good. That's, 15% on the year is a great gain for the stock market. We'll see if we can hold these gains so far. The Russell 2000 caught the worst of it, down 4.7% on the month, 3% on the day, and they are red for the year. The Russell 2000 are smaller market cap companies. So these companies definitely get affected more by tariffs and things of that nature more than the big conglomerates like Google and Facebook and all that stuff. So what do I think is going to happen with SoFi stock, guys? We're trading in the $14 range, but I just want to go over these numbers with you guys. They look really good to me still, right? The last report coming in for the last quarter of 2024. Record revenue at $727 million, up 20% year over year. Operating expenses are up as well. You never like to see that, especially when the revenue increase matches the operating expense increase. Not great. I'm not going to lie to you, SoFi investors. That's just the way it is. But the net income is up dramatically. So the bottom line looks really good. Anthony Noto and the team are executing on the bottom line. Net income coming in about 600% year over year gain. That's incredible. And the net profit margin up nearly 500%. All very, very, very impressive numbers, guys. The EPS is also up 12%. Not exceptional, but pretty damn good. Now, when we look at the balance sheet, total assets up 20% year over year. Total liabilities up 21% year over year. Cash and short-term investments down 17%. Cash flow, very, very important. We never want to see net change in cash go into the negatives. That's for sure. That's a red flag for me. Net income is up almost, like I said, around 600%. Cash from operations up 20%. Cash from investing up around 9.5%. Cash from financing down around 38%. And net change in cash down year over year 181%. It all depends on how they use that cash. Are they using that cash to open up new avenues and invest in other things? That is where Anthony Noto and this team is very, very, very poignant and very, very good at, is taking the cash that they have on hand and investing it in different arms of the business, right? So quarterly, I'm happy. I'm definitely happy on what's going on. If you take a look, top line and bottom line increased. We need to see that. This is probably going to be not on this trajectory, right? We had small net income over the last 4 quarters. What's it, 5 quarters in a row of profitability. And then just going over this feature presentation, some of the highlights of 2024. Record adjusted net revenue of $2.6 billion, up 26% year over year. Record adjusted EBITDA, $660 million, up 26% year over year. We hit 10 million members on the SoFi platform, 34% change in year over year, and a 10x growth over the past 5 years. Clap it up, SoFi investors. Let's clap it up. Extremely, extremely impressive. Record loan originations of $23.2 billion. And that's with this team being pretty conservative over the last, I would say, 18 months, right? When inflation is high, you always got to be very careful with loans, because when inflation is high, sometimes, and interest rates are very high, that's a bad combination for business, especially with loans. We don't want people defaulting on their loans and SoFi having to eat some of these loans. So you've got to be very careful on who you're lending to and how you're lending to them. I think that's a very, very poignant thing that this company has done exceptionally well, is not overextending risks. And as inflation comes down, hopefully interest rates will follow And that's when we can be a little more expansive with the loan originations, right? But we're on the right trajectory. I think everything is good with the SoFi company. The only thing that is concerning for me is the growth of Galileo. Not a lot of growth. Straight up, big time investment for SoFi. Lots of money, guys. An exceptional amount of money invested in Galileo. And the return on that investment hasn't been there yet. Will it be there in the future? The team needs to be better at executing. For me, Anthony Noto needs to go into that team, cut the snake's head off, get new leadership in that position who's marketing Galileo and projecting it out into the universe. We need to get better ROI on that insane investment we made in Galileo. That's my only bugaboo. When I look through the highlights of 2024 and this past earnings report, Galileo growth, my major concern, guys. I'm going to keep it real with you guys 100%. I could see the stock, however, fall back into that $12, $11 range. I'm not going to bullshit you guys. That's not what I do here on this channel. So if you want the truth, make sure you subscribe to the channel. $12 seems about 11. Unless the whole economy goes to shit, we could go back in that $9, $8 range. But since we've seen monster gains, sell some covered calls. That's where you take 100 of your shares. You have a strike price, say $16 or $17 at a certain date. And if SoFi is below that strike price, then you get to keep your shares and the premium. But if it's over those shares, say you did a $17 strike for 2 months from now, and SoFi goes over $17, you have to sell your shares at $17. That's the risk. So if it goes to 25, you still have to sell at 17. But you can roll those positions, but that's a different topic for another day where I'll get into rolling options. But I'm selling covered calls. I'm also selling puts in that $10, $9, $8, and $6 range over the next 6, 12, 18 months. I love selling options. That is my major player for me where I make the most money. You know what I mean? It's kind of a make money slow type of situation, and it can bite you in the ass a little bit if the stock runs up huge like Palantir. I definitely had to roll some positions and take some losses. But for the most part, a stock like SoFi is not going to see that exponential growth. It's not in the AI universe, but I think SoFi is going to be slow and steady. My price target for the end of this year is still over $20. Coming in that $21 to $23 range, depending on how this market kind of plays out. If inflation is sticky and this administration continues to fire workers, it's not going to be good for the economy, man. You can't lay off and fire hundreds of thousands of people and not expect to see some sort of impact in consumer spending, right? One last thing, guys, please do not panic sell your positions. Do your due diligence on the companies you own. And if you like the companies, think about these sell-offs as a buying opportunity. I started adding to my Palantir position and my SoFi position on Friday, and I will continue to do so if the market continues to sell off. We'll have to see how these next financial reports come out. I will be here updating you each and every step of the way. Don't forget to like and subscribe. Peace.